All right, folks, well, it is 11:34 a.m., which means, of course, it's time for our chart of the day. And today, folks, we are talking about Costco and Amazon. Neck and neck over the last 5 years. Take a look at this chart. The higher stock prices also come with comparable earnings, at least as is measured by price to earnings, what they call the PE ratio, on a trailing 12-month basis. It's basically just fancy talk for how expensive the stock is. Costco, about 48. Amazon, about 47. Now, Kiko, I know that you are a Costco stan, but important to note here, Costco is the one that maybe people didn't expect to be so expensive here. So maybe it's a crowded trade. Are we, burying the lead there on that?
Yeah, it's a crowded trade. It's also a consistent company. I mean, I make no secret about the fact that I like Costco, right? I also use a lot of Amazon, by the way, but that's an interesting chart. I mean, Costco, we have seen sort of consistently make those gains. We've also heard a lot from the company about some of the challenges it's faced, obviously, on the supply side of things, no different from other companies. But I am not going to pick a side on this one, Brian.
Yeah, well, here's the thing about PE ratios, right? When stocks get expensive, that's expected for growth stocks, right? And Amazon being one of those big FANG, high growth, people think this is going to be the next big conglomerate, and already is the big conglomerate in this country and around the world. Well, maybe you can justify a 47 PE ratio, but the big surprise is really on the Costco front, where people have seen this as a more reliable value play stock. And it's important to remember, it's Costco that actually distributes dividends to its shareholders, not necessarily Amazon, maybe at some point in time. But it just underscores how, people get kind of tied up and maybe tripped up over these sexy narratives about future revenue streams and how good you can try to entrench yourself in American culture in terms of being an American growth stock. But you can still be a highly valued, at least by investors, type of equity if you just have a decent, strong business model that has good margins. And I think that's really the takeaway from Costco here. But again, I mean, look, you and I, we have gone to Costco. We are fans of Costco, and maybe this is just investors getting back into the stock ever since they brought back the free samples.
I haven't gotten free samples the last 2 trips I've taken to Costco, by the way. It's a message to Costco because I don't know if they're maybe not distributing them around the clock anymore. But Brian, I think, to bring this back to specifically about the stock, I mean, I think what you just said there, this being a reliable value play is just that. This is not a fancy company that is out there with M&A acquisition trying to expand beyond their business. It has been very, very focused, but has put up consistent gains.
Yeah, and a reminder that, they're a media company, too, because the Costco Flyer, among one of the most circulated publications in the country.
I was wondering where you're going to go with that.
Yeah, we're bringing the threads here. We'll leave that there for right now. Coming up on the other side of the break, guardrails for the metaverse. We'll explain why experts argue virtual worlds need regulation and why lawlessness could make it a scary place. Ooh.